All right, I'll start once again then.
Okay, thank you.
Hi, everybody. It's Naval. I'm going to give you an overview today of basic technical analysis, what the candle is, how we are going to use the candle to determine the trend, how do we use to trade, how we could use the candles to make stop losses, resistance, targets. Then I'll also give you an overview of my Excel sheet, which I sometimes share with you, how to create those levels. Then I'm also going to give you a detail on Elliot waves. How do we do that? Then if time permits, we'll go into the detail about some of the technical patterns, and then we'll have a Q&A so that if you have any questions in your mind or if you have any doubt, we'll clarify that. In case you have anything, you can write that in the chat window, and me and Raghu can answer that one by one.
Naval, like we have Sri and Ram, who is helping us in the chat. They will also answer their questions.
All right, that sounds good. Okay, so I'll start. So technical analysis is the study of market action with the help of charts. Like there are multiple ways of trading. Some people trade just because of they feel that market is going up. Some people trade by just looking at other people that yes, he's buying, so I should buy. But there's always a rationale that if you're buying something or if you're selling something, why you are doing that. If you get that answer, the percentage or the probability of your trades making profits is going to increase. It's not going to be 100%, but yes, you will not lose in this scenario. So if you start to look at the charts, look at a basic candle, and then understand that candle, this will help you to understand that how the market is trending. So let me show you what a candle is for anybody who has no information about the candles. This is a candle. Let's take this example. This one. This is a candle. This is the, hello? Raghu?
Yes, Naval.
You asking something?
No, I'm not asking anything.
Okay, sorry. So this is a candle. This is the body of the candle. This is the upper wick and this is the lower wick. Now, why this candle is red? This candle is red because it was open here. So which was 299.36. This is a chart on a SPY. So this candle says that I open on 299.36 and I closed at 299.22, right? This means that the open and the close are different. Open is higher than the close. That's why this candle becomes red. And you see the wick, this is the highest point this candle achieved during this time period, which is 15 minutes here. And this is the lowest point where this candle reached during this 15-minute interval. So if you understand the basic candle, I'll start to tell you how this candle behaves. So if you look at this example here, we have a candle where it opened here and closed here at 299.91. Then we have a next candle which opened at 299.990 and which closed at 299.70. Okay. Now, if you see here, there are basic principles of forget about chart patterns, forget about everything. You can simply trade a candle. Just imagine that the length of the candle is 100%. Now, here it will be somewhere 50%. Now, if the next candle, right, in this case, this candle opens below the 50% of the previous candle, you mark that candle as your stop loss and follow that direction of that trend. The trend is determined by placing right at the top. This is the high, high, high. So if I choose a trend line, I'm just explaining the candle first. We'll go into the trend line and everything. If I click here, 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 in this example, let's click here. You see the trend is down because the highs are going down, and the next one. So trend is like for a formidable period when you connect the tops and the lows together on a single line, that's a trend line. And the trend line gives you a direction. Now in this example, if you're simply trading a candle, you see the length of the candle here. If the next candle is opened or is below the half or the 50% of the previous candle and the direction is going low, you just need to place a stop loss at the 50% and short at open. So you open here and you short, and you just need to wait for the next 3 candles.
$1. $1.
Hi baby, who's this? So you need to see 50% here, and you can apply it anywhere. If you have 50% here, next candle is down. So right there, you have your stop loss at this moment. You short here, which is 299.89. Okay. So you open 2989, you made a high 2994, but your stop loss is somewhere middle, which is about 300. So when you short here and then trade for next 3 candles, 3 or 4 candles, which should be your target. 1, 2, 3. It did not hit your stop loss and it goes down, down and down. You may not be able to like reach here or make profit here, but if you trail your stop loss, depending on the next candle 50% and then next candle 50%, this will be your trailing stop loss right there, 29960. So at this moment, you'll be able to make sure that yes, my profit is sustained because you shorted from the middle of this candle to the middle of this candle. And if you see here, the next candle, which is the green one, it came and it hit the stop loss and then went down again. So trailing stop loss, you have to be very careful that when you want to keep a trailing stop loss, but if it breaks out from this trailing stop loss, then you need to exit. You need to like make sure that you're taking your profit. Okay, so I'll show you one more example here. So let's see, this is our candle, right? We're not talking about any patterns. We are simply trading a candle. This candle can be a 5-minute candle or a 15-minute candle for an intraday. Or if you're trading for a daily trend or daily candles, you could use 1 day or 1 week. In this example here, you see the candle. This candle opened at 297.34, high made 297.66. All these things are right there. Okay, so you choose a middle and then make it as your stop loss and look at the trend. The trend is going up. Okay, initially when you start to look at the candle, right, you will not know where this direction is going to be, whether it's going to be reversed, whether it's going to be moving up, or it's going to be a doji, like in this case, right? So first you will see that the next candle should be above the middle of the previous candle. Okay, so in this case, like if you see here, this is the last candle. Okay, now Monday morning, if the market opens and the candle is above the 50%, okay, you need to see and make a trend line from the bottom of this and the bottom of this, top of this candle and the top of the candle, which will be forming on the Monday morning. And see if the new candle, which is going to be formed on Monday morning, is above the 50% of this candle, mark that as a stop loss and try for the next 3 candles, profit for the next 3 candles. Once you have a profit for next 3 candles, you are good. You take out your money or you put your trailing stop loss. All right, this is a basic candle trade. How do we do a candle trade? Any questions on this? No? Okay. So with just help of the candle, we can trade. We do not have to look out for anything else if we simply understand the candle. Now, most of the people think that news are there which can like change the technical patterns. Yes, that is true. But the technical charts and the data in the charts, the candles tell you that something is coming, because there's a huge amount of stock distributions. There's a huge amount of stock volume which will happen before an event. Otherwise, like something which is unpredictable, they can happen. Like Monday morning, Syria like fired a missile towards US. That's just unpredictable. If it happened, it will have an adverse impact on the market. But some of the events like earnings, like all those things, they can be evaluated. They may not be 100%, but yes, you can evaluate and try to do a paper trading on those evaluations to see how is your study. All right. So the basic principle for a technical analysis is to understand that yes, every known information, if I found an article, if you found an article, or if you see some unusual option, it means something is supposed to happen or has already happened. And you are not the only one who will have that information. There are many funds, there are many managers or big broking houses, they have that information like before everyone else. So they do their job first, and then that market information is in the market. Okay, so you need to understand that yes, all that is already discounted in the market. Prices moves in trends, and trends persist. And this trend, meaning that yes, if you're making higher highs, higher, lower lows, that's a trend. And these trends prevail over a period of time. And that period of time, depending on what style of trading you are doing. I believe most of the people here in the group are doing intraday or maybe a day or two trading. Then there are people who are doing the swing trading. Long-term trading, I am not sure how many people do that. But long-term trading trades on the fundamentals, not on the technical charts. Short-term trading, one-day trading, or let's say swing trading, they are done on the technical charts. And all these charts follow a pattern, follow a trend. And we need to like use that trend to evaluate where we are in that trend. How can we use that trend? Where should we buy in that trend? Where should we put a stop loss? What should be our target? And all these market actions like price and this trend, it repeats. It repeats after every every few candles or times. Then we also need to understand the volume aspect. Volume is the price action. So if you see a candle with a very heavy volume, and you see there's a buying or there's a good decline, that needs to be considered. And last but not the least, the support and the resistance. We need to have the understanding of what the support is, what the resistance is, and then we use that into our technical analysis. Okay, so these are the basic agenda for our today. We are also going to do understanding of which time scale we're going to use when we are doing the intraday trading. Like if you are a very quick scalper, meaning that you are right now, or you have the complete screen in the front of you and you can trade tick by tick, 5 minutes is the right candle for you. If you're a person who is a little occupied, who cannot like track every minute, a 30-minute candle is good for you. And if a person is doing a swing trading, daily candle is the best. Then you have to also consider prices. Now on an intraday price, if you have open, high, low, close, right? If you open above the previous close, above the previous high, you are in a positive trend. If you open below the previous close and the previous close, you are in a negative trend. So you just need to determine that, yes, which trend you are in, and based on that trend, take a direction based on the candle, which I just described to you. Now, if you're comfortable with the candles, the next step is to draw the trend lines. Then once you are comfortable using the trend lines, we'll try to form the chart patterns that yes, a couple of these candles evaluate or come up to which chart pattern. And then we need to understand what are the chart patterns, what they mean, and to use that chart pattern to make sure that yes, this is our support, this is our resistance, this is our target. Like one of the chart pattern which I have given to you was the inside bar. Inside bar is a daily chart pattern, which is the combination of two bars The first bar is a bar where you have the high price and the low price. The second bar should be within that range. And the volume of the first bar should always be greater than the volume of the second bar. Now, if any stock which is following this chart patterns breaks out on any side, we do not be worried about which side is going to break out. On any side, we just follow that direction and make sure that the stop loss is the stop loss of that breakout. That's it. If you follow that, it may trade 1 or 2 days, you will be in good profit. Then we have indicators, like most of the people use RSI, MACD, ADX, DMI. We'll talk about that. Oscillators like we can, like MACD is also an oscillator, so you can use that. Okay, so let's start a trend line. What is a trend line? A trend line is simply a straight line that connects a series of security prices, either a top or a bottom. So if I go here and try to draw a trend line on the daily charts, let me go to the daily charts. See, so I'll start from this. This is investing.com, guys, if you're not used to it. Most of the people have their laptops which are company defaulted, so they cannot open or install many things, but this site is readily available and it has real-time data with all the charts and the patterns which can help you out. So start using if you're not using in your offices. It's investing.com. It has very good information about the stocks as well as the indices and the trades. So here, these are the tools which you can use. So how to create a trend line? This is a trend line. So you choose a bottom. That yes, you're choosing this trend line. Choose a bottom and then let's say this one. Now you may be able to like see here that yes, I selected this, but if I click on this, I need to make sure that my prices were right on this candle. So instead of entering or like using my like mouse, I will simply click on this trend. You can set in Thinkorswim as well. So price one is here. So if I go here and look at my low is 290.35. So I'll correct this, make it 290.35, and I'm using this one. So I will choose the low 390, so that my trend line is correct. Okay. Now with the help of the trend line, I need to see where my stocks are and how should I trade them. Then I also make a upper trend line. I'll choose my high and the high. Again, I will double click here to correct the values so that the chart makes the proper, takes the proper values. So it's 292.31. And you need to use this trend lines properly because they're very useful. And this is 30113. Okay. Now, if you see in this, this is a range, right? This is a trend which is going up, and this is another trend line. So this becomes a channel. Now you need to see that this is going up. So your short-term trend, like this is a 1 day. So it's 6 or 7, 2 weeks time. So your short-term trend is up. So anytime the stock or the candle comes near the lower trend line, it's time to enter. And price below this trend line is your stop loss. So let's say you entered here, right? Now this, at this price, you move up, 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 up. You still have not like hit your stop loss. You're going up, up, up. Now the question is, where should I book? First of all, when you're doing the trading, you need to make sure you do not buy huge quantity of lots. If you're doing option trading, make sure you buy 2 or 3 lots. Okay. First lot you should always book when the candle hit the upper trend line. That yes, 50% profit is here. So if you have an option here, you bought that option right there, and then you hold it that you see next day it opened up, but it still remained in the range. Next day it opened up and it tried to breach the trend line above, but it came down. That's your first target. Now you can book your 50% here and trail with the stop loss. Now next, it's going up, but it's coming down. These are closing stop losses, not the intraday stop losses. Here. Up till this point, this did not close. But if you bought, or if you are having a 50% here, the next 50% is this candle where you need to book. Usually we do not do that. What we do is as soon as we are like 10%, 15%, 20% in profit, we are in rush to buy that. Even I do that because we do not know what's going to happen. But if you follow this approach religiously, then it gives you an idea that yes, this was your entry point. And if you also see the basic principle of the candle, which I told you, if this candle is the 50% up, you need to make a stop loss here of the 50% and then long. That principle is also correct. This is the body and this is the 50% and above. So if somebody bought here and made the stop loss, he just needs to hold it. It's gone up. It never came back until so many days. And with the option trading, I don't think so people will take it for so many days, maybe 3, 4, 5 days. So this gives you a good amount of profit. Do you understand this? Any questions on this, guys? Like you can actually ask. I don't mind answering that. Because if you understand this, the next things become much easier for me to explain.
I have a question. This is
Yes.
Shobna. You were explaining the candles from the bottom to the top, the trend line, but that
Yes.
is, the days have already passed. Now, if you're anticipating ahead of time, how do you know that?
Okay, that's
You're explaining
yep.
what's already passed, right? I was going to ask you how to look for that before it happens.
Okay. So in this case, we do not know what the candle is. Okay. So here, because trend line will be based on the previous ones and the future ones. So let me make a trend line here. This is like October 9. Okay. So I put my 1 point here, 1 point here, and there will be an extension to the trend lines. So let me correct the numbers. Price one is 297.97, just low, and this one is 296.91. Oh, sorry, this is 2884. The low is 2864. 2696. Okay, so this is the trend line. So here you see that the direction of the trend is up. Okay,
Right.
so if you bought something here, right, there's an extension towards this line, right?
Okay.
And let me make an upper trend as well. So if I click here and this one is 291.27. 297.97. 292.30. Okay, so here you see that the trend is going up, right? So from the previous days, you will anticipate that the next Monday morning, the session should open above the 50% of this candle,
Right.
which will be around 298.19 something.
Yeah.
Like you can draw the percentages and it will give you the exact 50%.
Okay.
So if next day, right, the candle opens above 50%, that will become your stop loss and you play for it.
Okay.
If it hits the stop loss, you exit, you do not fight the trend. Yes, it's going to go up. Wait until it goes above the trend line 50%. And then if it sustains, just hold it till it hits the extension of this line.
So do you do that on a daily day or in between that you're checking, say if it's you're doing on a day-to-day basis, when it hits the 50% down on this given day, you exit? Or is this on a
Yes,
daily
I
chart?
do that. But
Okay.
that's why when I like start the morning, I put the levels. I put the
Okay.
levels based on these trend lines, because these trend lines are pretty clear. If I try to deviate from it, I'm going to be in the loss. Like on Friday morning, I specifically mentioned that 3,000 and above, if it sustains and holds, the target is 3024. It reached 3,048, but then it did not hold it. So my stop loss in Facebook hit, but I didn't exit because I was occupied in the meetings. So I had to book $1,000 loss in that. But
Okay.
if I would have stayed there, looked at the screen and kept my stop loss, I would have like saved $800 or $900 because the stop loss was small, because the candle said that yes, you need to exit as soon as it breaches the 50% level. All right.
Of the previous day. Okay.
Yes.
Okay.
Now the
Thank you.
point is, if you are there on the screen all the time, it's easy to trade. But if you're not there on the screen and you just buy and then wait for the levels to come, it becomes hard because the market these days are pretty volatile because of XYZ reasons. There are
Yeah.
news, there are tweets from Mr. Trump, and anything
Yeah.
is possible, right? So it's
Got you.
better to put a stop loss. And I also realized that Robinhood has also started the stop loss option. So if you're using the Robinhood, use the stop loss option
Okay.
in the
Thank you.
options.
Thank you.
All right. Anyone have any other questions on this? Trends and trend lines?
Yeah, hi, Navaldeep Satyaraj here.
Okay.
Can you draw the trend line for the downtrend here from this 295? Yeah, so in the past. So to understand how it started downtrend from which point?
From which point? Then you have to like take proper Fibonacci retracements, because I cannot do it for 2 days. This trend line is primarily for a small term trade.
So here I can see like before October, so after September, right? There is a downtrend started.
Yes.
Yeah. So how we determined like started downtrend here?
Okay. So for that, you need to use Fibonacci retracements.
Okay.
Okay. Let me show you how to do that. You all understand what a Fibonacci is?
Not really, no.
No. So let me do one thing. I have that Fibonacci here. Let me go back to that and then show you how to do it.
Sure. Thank you.
Okay. So I hope you all understand what a trend line is. A trend line is simply a straight line that connects a series of security prices, either tops or bottom. So that's a basic understanding. Once you draw that, it becomes a trend line. If anything breaches below that trend line, you exit. If it goes above that upper channel line, you book 50% and hold that as your stop loss for the next 50%. Then we have patterns. Double top. A double top is primarily like, if you see in this example here, you see right there, the market comes. You see this dotted line? Market comes in the range and then goes back. If I squeeze in more, see this line. Here on at this level, you see nothing breached this level. It came 1 time, 2 time, and 3 time up to this level, but it did not breach it. It tried to retrace 2 times, and the retracement was like significant. So if I click here, right, And where is the Fibonacci? Up here it is. So if I click here, right, this was the top, right? So if I click here and that's the bottom, I'll correct the lines. It was low as 281.72. And always use the right numbers because they are pretty necessary. Otherwise, you will create something and it will always go wrong. And the high is 2023. So if you see here, right, the market started from this point. Okay, it fell here right at this moment. So the next important level which market should try to breach is 38.2%. Now look at here. When I draw this line, the candle tried hard. Couple of times it breached, but went down, breached, went down, breached, went down, breached, went down, and then it had to break out from this at this moment, and there was a gap. And then it sustained it. After that, it didn't came back. The next target was 61.8%. These are Fibonacci retracements. Like if you understand the Fibonacci formula, these are the retracements that yes, market went back. So it will at least retrace back to its previous levels. But 38.2% or 0.38 and 61.8, they are more important percentages. So at this level, the market will try to act as a resistance initially. So here it acted as a resistance, but once this is passed, it acted as a support. The next target was 61.8. So initially you see here, it tried to come here, but was not able to breach. So as soon as it breached, it was a gap up because it opened here. There was a gap and the gap was filled because the low was made. So it gave a confirmation that yes, now the gap is filled. We have taken everything into consideration. The trend is up. Now we should not come down and make it as a breach this support line of 61.8%. So once this is done, you go up, 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 and you're there at the 100%. 100%, you again reach the level. This becomes double top. There was one top here. There's another top here. It becomes double top. Then there's one more, which is like a little above. Now these numbers or these double tops need not to be very specifically exactly same number. They could be like 370, 360, 320. So you consider them as double tops in this case of SPY. Double top is a very bearish pattern. It means that yes, market has tried to cross this level over the last couple of months or last couple of weeks, but it's not able to do that. So the market retraces itself. But if it breaches, it's a breakout. So your double top will act as a support if it breaks this one right there. So if the market is going up and then if it breaches this double top, you mark that as a stop loss and go up. Right now, every time it tries to reach here on this top, it goes back because there's a huge amount of selling which is happening here. Is that clear? Whoever asked the Fibonacci retracements?
Yes, Navaldeep. Yeah, thank you.
Okay. So we have multiple patterns. One is double top, which I just explained to you. Similarly, we have double bottom, where the chart is inverse, and we see that the double bottom is made. So if we see here, okay, you see this, if I draw this, this is the trend line, flat trend line, okay? So in this trend line, right, the market tried to breach the bottom, but it got the buying here, where my mouse pointer is. Similarly, it got the buying here. So anytime when the market comes this level, people have tried to enter and go long. That's the double bottom for a medium term. and you see that it has not been broken. Now these patterns, right now I'm using a day chart. These patterns are applicable to 5 minute, 15 minute, 30 minute, or weeks. So it depending on what level of trading you are doing. Usually I do 15 and 30 minutes for the intraday, and 1 day for like a swing trade. Okay. Then you also see it is called head and shoulders. Like most of you have heard about head and shoulders. Here the head and shoulders is that this is the head because it's made the top here, and there's one more head, and there's one more head on the left on the left of my screen. On the right one, it can touch or can be equal to the middle head, but the right one should always be there as the smaller one, and they will meet on a base somewhere. Yes, so if we take this is the baseline. So if the market breaches something right here, okay, it's going to be very, very sharp and steep fall. So that's how you determine that, yes, which is the candlestick pattern. So here it is head and shoulders. It could be reverse as well. Like if you want to consider this one, WW, that becomes a different pattern, but there is a up head and shoulders and there's an inverse head and shoulders. You can like read about it and then you can come with your questions to me in the group and I'll answer. But head and shoulder patterns is a very important pattern. It gives you a clear direction on the reversal. All right, because I have limited time, so I'll focus on a few more things which are pretty important. So we have head and shoulders, top. This is a major reversal of an uptrend, and bottom is the major reversal where you can actually like go up, reverse the direction. Then we have triangles, ascending triangle, descending triangle, symmetric triangle. These are again based on the trend lines. When you draw the trend lines, and there's a, I've opened it somewhere. And if you guys use Think and Swim, there's a section called Education. You can learn about all these extension, retracements, chart patterns right here. This is an ascending triangle. Ascending triangle is a continuation of a bull trend. It's like they are squeezing, squeezing, and squeezing. Okay, and there will be a breakout in this scenario. Similarly, there's a descending triangle. It's a breakout towards the negative or the negative side. So it's a continuation of the bearish pattern, and ascending is a continuation of the bullish pattern. So these are the triangles which you can draw based on simple trend lines. So first you define your trend lines and then you join the tops and join the bottoms wherever they are going. Like here in this example, you were drawing like this. So wherever they are going, if the difference between these two are coming down, it means they're making a triangle. And then something will also happen. Now, if I divide this chart into smaller time frames, let's say 15 minutes, you will see something else. This is a pattern. So here you see the trend is going up, 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 but you see the width of the body is getting less, less, and less. And then it becomes static and it becomes an inside bar on that. It means that it was ascending wedge. It was going up, up, up. The body was big, 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 then small, small. It means that there's going to be a breakdown from the ascending wedge. Similarly, there's a descending wedge here, that the highs were going down and the lows were going down and they met, it became a bottom and then it went up. So ascending wedge or descending wedges, they are very useful in the day trading. Sometimes you will see that the market prices for a stock, let's say Amazon, is holding up. It's not moving in the market. You just try to see if it is in the ascending wedge or not. Let's see what happened on Friday. See, initially it was ascending wedge. You see, the market went up, 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 and the volume was down, down, down.
So is
This was
that the
most,
middle as like consolidating?
yes, it was trying to
Okay.
find a direction, but the ascending wedge always leads to dodgy formation and then a final decision. So here it tries to find a direction. It didn't. It started to lose. It lost big in the last half an hour.
Okay.
Now here, this will make a descending wedge. So if it reaches this range, right, 1748, which was a base for quite some time in the past, if it breaches this, there's going to be a huge fall. But if it retraces from here, it's going to go up. So 1748, 49, whatever the low of that day was, that will act as the point of convergence of this descending wedge. All right.
Thank you.
Now, you understand the candles, right? I hope. Most of the people who always had questions about what the candle is, how do we trade the candles? I think I give you a fair overview of the candles. If you try it on your own, you will have much more understanding of how to use a candle. Do not rely.
Naval,
Yes.
a small question. Like yesterday, actually, when Mayur told, like for Amazon, like a 1765, it went there and 1765, he told, I think. It came
1768.
down immediately. It went like little bit and it came down and then again it started like, at the end moment actually.
Yes.
Why it happened like...
Let me explain that.
Yeah.
So yesterday when I gave you the level 1768, okay,
Mm-hmm.
Here.
Okay.
This was the candle when it was like 1768 something. Okay. I told you it will find a support near 1768 in the morning, and then it tries to reach up and then fell down. So initially when I thought that yes, this was a descending wedge, right? And descending wedge holded, the next candle moved up above the 50%. So this candle would have taken a support of 1768. So if you look at this candle, look at this low, 1768. So I was thinking at this, the wedge is closing down. So when it converges, it acts as a support. So here the support was 1768.23. And the next candle opened and goes above the 1768.23. So that was my support. For that, it went up a little. It went up to 1776. Right? I should have booked my Amazon there, but I didn't because I was doing a presentation in my office. And then it breached this line. As soon as it breached this line, the fall was imminent. Bum, bum, bum.
No, okay. Okay.
So again, this was a descending wedge again. See, this is a 15-minute chart. This will give you a clear picture. This is a descending wedge because now the highs and the lows are converging. And you also need to see the volume with perspective. Here the volume was the most. Okay. So people sold in panic at this moment at the low price. Then it made the bottom right there and then went up, up, up. But the volume was declining. Right. So it means that the strength of this up is not too much.
Oh, okay.
So it's supposed to fall. Here it tried and the volume reduced because it was in a dodgy mode. It was trying to find a direction for itself. So it's a dodgy. Okay. Or if you see the inside bar, if you understand the inside bar on the 15-minute chart, like I usually used it on a day chart, but if you want to see it, you see that there's a candle and the other candle is within this candle.
Yeah.
Okay. It breached this line and then fall, bum, bum, and look at the volume. This volume is a 15-minute and it's the close of the day. So the close of the day has a settlement volume as well.
So it
So all
seems
the
like it's
intraday
going to go
positions are
down.
settled.
Sorry.
Yes.
Does that mean from the volume, it does it look like it's going to go down?
No, that's what I'm trying to explain. The last 15 minutes of 5-minute volume, like if I click 5 minutes, you will see this green. But this is not actually green or red. This is a settlement of the intraday trading. So people who buy stocks on margin, right? At end of the day, they need to close their positions.
Yeah,
Or
okay,
the
yeah.
exchange do that. So at that moment, all those positions are traded and closed. So they are not buy or sell, they are like neutral.
What did you click to get that?
This is the time scale. You can choose 5 minute, 1 hour, 1 day. So based on that, it will have a different color.
Color. Okay. Thank you.
Yeah, I got it. Got it now. Thank you.
And a couple of more things, like with respect of time, you see there's a green line going here and there's a red line going here. These are moving averages over the last candles from the last, depending on how many I'm using. Like I always prefer 1234. People use 822, but for me 1234 and 30-minute chart. Just note down, it's 12 exponential moving average, 34 exponential moving average over the 30-minute chart. It works for me. Okay, so every time you may not like the colors, but I use the red one showing me positive and the green one showing me negative. Okay, so if you see here, there's a crossover of the moving average. And let me add a few more details here. There are a few more indicators here: RSI, DMI, which is directional movement indicator, and MACD. And this is check-in money flow. 99% people don't use this, but this is very handy and very useful. So RSI tells you that what is the strength of the stock or the equity or the security, whatever you are trading during that candle time frame. Directional movement indicator tells you what is the strength of that trend. And there are 3 values here. The first one is the strength of the trend, then the strength of the positive trend, and the strength of the negative trend. The blue is the strength, that yes, that move is coming up, it's strong or less, in the strength of the positive and the negative. MACD is a convergence and divergence. It's a leading indicator. So before anything, this will switch the directions and you will have a fair idea that yes, something is going to happen. And check-in money flow is an indicator which helps you to understand that yes, is there any distribution going on or is there any accumulation going on? Anytime there is distribution, you will see it downwards. So in this Amazon, say, there's a huge distribution on 17th and 18th. The big funds were selling here.
Hey,
Before
Naval,
that, it was buying.
quick question.
Yes.
Does the MACD work for long-term trading, like more than a few days?
Yes. If you do a day chart, yes.
Okay, thanks.
So if you see here, you set up, I'll come to this SAR. If you see here, you have to set up your EMA, exponential moving average, to 12, 34, and give color whatever you want. So as this changes the direction, red comes up, meaning I am happy, I'm going long. I see the strength here at this crossover. The strength is about 60. So as soon as the strength crosses above 60, I would like to jump in. Plus, I would also see the DMI at this level. The DMI is 23. So my strength is still okay if it is between 20 and 40. And the negative strength and the positive strengths are somewhat equal. So it's fine. So I can jump on it. And look at the MACD. The blue line came up above the red line. It means that yes, it's giving me a good hands up that yes, it's a time to buy. And you see there's a distribution. This distribution is useful if you like go into the depth of it. So start using it, start understanding the like definition of this, and you will see it is useful when you are confirming. So the combination of my EMA crossover, my RSI, cross, my DMI cross, my MACD cross. Either I could be a very like aggressive trader, I can buy it here because everything is in my direction, or I can wait a couple of more hours in like candle and see at this moment if I buy. Let's say I bought at this moment. The stock price of Amazon was 1736. It closed at 1736. Now I looked at my RSI. RSI was 53. My DMI was 23. Positive one was 26 and negative is less. So it means that negative hands are like kind of lagging and the positive hands are coming up. MACD is blue at this moment, so I'm good. So I bought this and I need to hold it. So if I buy here, I have to hold it up till my negative happens. Negative crossover. You do not have to worry about this because this gives you like a couple of days. Plus you are good. So here, if I'm long, this is my stop loss. If I take position anywhere here, I'm not going to hit my stop loss. I just need to wait and wait and wait. It may go up, down, but it's up to me whether I want to book my profit here or should I wait till the actual crossover happens. This is also called stop and reverse, SAR. So if you see here, you see the stars. That's parabolic SAR. This again an indicator. So parabolic SAR says that yes, you can come here and buy and make me a stop loss. So here it was saying me buy it 1722 and the close price was 1741. So as soon as you move up, it updates the stop losses. So at this moment, right, it was 778. So you're still $37 up from the price of your purchase. And at this moment it says, oh, it hit your stop loss, now reverse. So it reverses. It asks you to sell you at this at 1774. You sold it. It again hit here at the same price. So no profit, no loss. See, so this is a indicator which is generated by the system, and the EMA crossovers is something we build so that we can use it according to our need. So the SAR and EMA crossover with all the indicators is pretty useful for intraday trading. Any questions on this? I use this primarily 99% of the time to do my trades, and it works. Then I draw the trend lines for my level, especially in the SPY, and I tend not to like involve in so many stocks. I use 10 or 15 stocks and indexes. I try to look at the index level and then follow my stock according to the trend of the index. If the index is doing positive, I'll try to buy on dips. If the index is negative, I will sell on rise.
So now I have one quick question. Sorry.
Yes.
So does it apply for, for the long-term trades also, right? Like monthly and yearly, if you want to do a planning of?
Buddy, let me be very honest. I never believe in a long-term trading. I don't believe in it.
Okay. So what will be the long-term for you? I mean, a week or 2 weeks is a good thing? I'm just saying, what are the patterns?
I can tell you from my own experience. Like I have bought State Bank of India stocks in India in 2004, and they are about like $300 or 270 something now. So I bought that price, and I have 4,000 stocks of that. For last 7 years, there's hardly any return on it. Okay.
I got it.
I also have Punj Lloyd and Reliance Communication from India. The price which I bought them, like Reliance Communication, I bought them for about 650. Now it's 1 rupee. So you can never be sure about the long term.
Yeah.
All right.
But most of the time, healthcare stocks will take a long time. It's my observation, but I don't want to take your time too much. But yeah, most of the healthcare
Yeah,
time.
let me be fair to you. If you want to trade long term, always trade in index ETFs. They will always go up instead of individual stocks.
Sure, no, got it. Thank you.
All right. So any questions on this EMA crossover, volume, understanding candles, and how to find where to trade and where is the stop loss? All right. And like I have so much things which I need to show. This is the sheet you must have seen most of the times when I post. So in this sheet, there are two calculations. This sheet I actually prepared, but I'm not able to share it because some idiot has locked it and I do not have credentials to change it. But I can tell you how to make this sheet. This sheet is made on two principles, Camarilla and Gann. So Camarilla formula is, I've added that in the presentation. It's right there. So if you open a Google Doc and create a sheet, you could actually pick up the API from Google, Finance API, and you can simply add in your, let me show you how to do that. Right, if I need to choose a new one, I've added all these stocks here, but if I need to choose something else, let's say I am looking for Coca-Cola, I'll put KO. Now this KO will go to Google and pick me the live data. So when you want to prepare a Google Doc, add all these formulas which I've added here, right there. It will pick up the previous day high, low. You can search for Google how to figure out yesterday high and low. Insert in your sheet, add all these formulas, and you will end up with this sheet. So how to use this sheet? To use this sheet is that, let me show you. I have written here as well. So in case somebody is not able to comprehend what I'm trying to say, read this. Price between H3 and L3. So if I go here, you see there are multiple targets, H1 to H7 and L1 to L7. So here, if I need to buy something, right, I need to buy or sell when it is above H4 or above H3 or below L3. Between this range, I should not be buying. So let's say the previous close for KO is 53.79. Okay, Monday morning, it opens below the previous close and reaches L4 or L5. Okay, I will not buy this because now there's a short breakout and the stop loss is this. But if it comes back to L3 and holds, I will buy. Okay, and I will buy for my target H1, H2, and H3. If it crosses H3 and holds, it's a breakout, so I'll hold it. Similarly, if, let's say, I'll give you Amazon because Amazon is pretty good example. So on Amazon, the previous close was 1787, the day before yesterday on Friday. Okay, so on Friday, it tried to cross 1796.90, but never happened. The high was 1794.38. Okay, so it came down and there was a sell below. The same way that L4 was breached and L3 came. Here H4 was breached, but then H3 came, which was 1796 was tried to be hit, but didn't made it, but then came back to 1796. So it was a short and the stop loss was there. You short it and then you wait for L1. It was L1, L2, L3. And then there was a short breakout after 1778. And the target was 1759.71. It matched all whatever happened on that day. You can compare it. Now, this is called Camarilla. There's another way of or add-on calculation
Hey, Naval.
mechanism is called Gann. Yes.
Quick question. So will this chart or will this spreadsheet work even post earnings, like, right the day after the earnings, or is this something that we should be aware of?
Like earnings are very unpredictable. Charts can give you an information. This may not be 100% towards earning, but they're like, if we have 180 days of trading for a stock, right? There are only 4 earning days. Besides those 4 earning days, it should work.
Okay, thanks.
Naval, just a super quick question. Do you use this in conjunction with your charts? You take the current price to see if it's worth getting into it, or is this for confirmation, or is this your primary?
It's for confirmation. It helps me that, yes, am I in the right direction or not?
Thank you.
And all these, like the formulas which I've entered here, you can use it. It will help you to make this sheet. Okay. And you will see all this information about the Gann static number. We do not have time to go through the Gann like way of calculations, but I'll show you a link. This is a link from an Indian site, which is pivottrading.co.in. I'll add this to the presentation. Here you have multiple calculators. I only use this for Gann. You also have a Camarilla, but I prefer to have a Camarilla on my own. So I use simple Gann of square of 9. Now Gann was a mathematician or something. You want to learn about history, it will help you. So this tells you that every value, like it rotates in the terms of square of 9. So if you have a value here, it will go from here, 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 and then it moves up. So if I say value of Amazon was 1790 or Friday morning. Okay. So on Friday morning, it told me that you should buy it only above 1795. And this is your stop loss. Sell below 1785. The targets are 1775, 1764, 1754, 1743. So as soon as your day starts, you can use this for your reference. Within 15 minutes of your day start, let's say market start at 9:30, you would go at 9:45, enter the stock price at that moment, and then you will get these values. These values, just take them into consideration for your trend. Again, do not consider them as your stop losses, consider them for your trend. So if it goes below 1785, it means it's a negative trend. So make your position based on that. It works very, very in good percentage. So here I have used all this and put that into my Excel sheet. So I get my values here. So on Monday morning, it told me that the resistance was 1794.96. Okay. And stop loss was here. Day high sell was best at this moment. And sell, 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 hold, sell. Target one, this one, this one, this one, and this one. And you see the day low made was this. Also, if you want to see the confirmation, you look at the support here. The support was 1780 to 1778, which was broken, right? So this gives me a confirmation that yes, I am on the right direction, and I use my pivots, the daily pivots and the Gann pivot. If my price goes below my daily pivot and Gann pivot, it means it's time to reverse. If the price goes above this, it's time to go long. All right, guys?
Yeah. So one quick question, the targets, right? Because I like the jackpot target, but though it all depends upon the volume, right?
It will come. You just try it, it will come. Because all these technical charts, they works on principles and they works on some kind of algorithms, right? This formula is also an algorithm.
Now my question was like, because of, when we have to sell it and when we have to book the profits, like when I hit the target 1, target 2, target 3 or jackpot. So it all depends upon the volume only, right? Most of the time.
Yes, volume is an important factor. But as I said in the beginning, when you are trading, you can start trading from 3 lots instead of 10 or 20. 3 lots, sell 1 at target 1, sell 2 at target 2, keep this third one and run it for target 3, 4, or 5. Do not
Thank you,
think that you can make millions in a day.
Yeah.
Try to take profit as and when you can get.
Thank you.
Any other question, guys? No? Okay. So,
Naval had a question I was not passing through. Can you hear me now?
yes. Tell me.
Yeah. So when you were showing those 4 factor where the money flow was the 4th one,
Mm-hmm.
I'm not wrong. The money flow was low, but other 3 indicators for Amazon were positive to buy. So is it like if 3 out of 4 are good, you can go, or like is
That's
there a
what I
priority?
said, that this money flow indicator is a little comprehensive. So you have to understand. So at this juncture, right, the money flow indicator was negative. Correct?
Yeah.
If you went long, you see for how many like candles, Amazon is still in a phase of consolidation. It was not breaking out. Like $40 is not a range for Amazon. It's like $150 or $200, right? So even if you look at the daily charts for this, you will understand what I'm saying. It's still under consolidation. You see, this was the base for some time. So there was a consolidation. And then from there on, it was selling, selling, selling. Even the selling is now consolidated. Here it went up.
Got it. So is there a weightage, like RSI holds more weightage than MCAD, or?
No. Like CMF, just ignore this. First, you need to read about it. Only then try to use it. Just add this for your understanding. But these 3 indicators, if there's a combination of EMA plus this one, plus this one, plus this one, plus SAR, it's a super combination. It's time to go in the direction. If there's 1 or 2 missing, it's your like personal understanding that yes, I'm going ahead and it's like out of 100%, I'm 90% confident. If all 5 are in your direction, it means you're 100% confident. So you may find 100% confidence in like very rare scenarios. You may get 70 or 80% scenarios where you will have 3 or 4 parameters matching in a direction. So I will not trade with only one indicator. I will trade a combination of at least three, and not all 5, at least 3 in one direction.
Got it, Naval. Thanks.
The other important thing which I wanted to explain to you was Elliot Wave. I'll be very brief on this because this will require a session in itself. But this is a very interesting and very important way of doing the charts. So here, all the charts, like if you see, they all move. Let me just move this. All the charts moves in waves, right? You see, from here to here, then here, then here, and here. This is an Elliot wave. If I draw my Elliot wave, and I have written the rules pretty clearly, this is the 5-wave impulse and 3-wave correction. So 0 to 1 is an impulse, 2 to 3 impulse, 4 to 5 impulse, and then the corrections. AB is also an impulse. 1 to 2 is a correction, 3 to 4 correction, 5 to A correction, B to C corrections. So 1 to 5 is called impulse cycle, and this is called a correction cycle, but it has correction in between and it has impulse in between. There are 9 levels of Elliot waves which we can go up to in a chart, but for the understanding of the group, let's limit ourselves to only the lowest level, 1, 2, 3, 4, ABC. So 1 up, 2 down, 3 up, 4 down, 5 up, A down, B up, C down. 5 net up and 3 net down. This is an Elliot wave. This is a basic principle of an Elliot wave. So wave 1, 2, 3 form an impulse. Wave 3 are from correction. Fibonacci retracement, I just showed you what it is. Fibonacci extension is a reversal of that. So in technical analysis, or like Elliot wave as well, the market correction which is expected to end at the areas is support or resistance, denoted by the Fibonacci levels, which I showed you, the 38.2 and 61.8. The market is then expected to turn and resume the trend in the primary direction. Fibonacci extension is the extension of the current trend. And these are the multiple percentages. For retracements, I only refer 38.2 and 61.8. They are the golden ratios for me. Extension, I prefer only 161.8. That's it. I do not look into any other extension. Here I have rules how to make. You can find all these rules all over the internet. So wave 2 is typically a 50%, 61.8, 76.4, or 81.5 4 of the wave 1. So if we start to draw, let's say I take this one. Okay. So this is the bottom on this chart. Okay. So let me make my Elliot waves. That's my and I can verify this. Like I'm just showing you how to do it, but you can verify this by creating a Fibonacci retracement and see Fibonacci extensions that yes, it is following the principle or not. You see 0 to 1, 1 to 2, 3 to 4, 5. Now here it's A, then B, and then C. You can make multiple level of Elliot waves. Here you will see all the rules. Like we do not have time to go in detail about this, but this is how we do it. Wave 2 is typically 50%. Wave 3 is 161%. It is the biggest wave. So if you see here, this was the biggest one. So if I draw an extension and a retracement from 0 to 1, if you see, the retracement was 38.2. It came almost near. It's less than the 50%, which is true. Now the third one is extension is 161%. So this is retracement. This is extension. With extension. This is the extensions. See, 0 to 1, 1 to 2, it's 38%. Then it went up to 61.8, which is the biggest one. So it is following our theory of Elliot wave. Then it came down to this point, which is around 2.36. Wave 3 is 161%. These numbers may not be 100% true, but yes, it will be near. Wave 4 is typically 14.6 or 23.6. You can see for yourself that yes, if it's coming down, it's 23%, so it'd be 14%. And then wave 5 from here will be an extension up to 100% or 123.6 of wave 1. You see here, it's about 80%. See, so if you follow this, this is a little difficult to draw and understand, but yes, it is very, very useful. So you will see that again, the retracements and the extensions which I've explained. When the market tries to go below this range or go above 38 point, it will act as a base. So here it tried to breach the base here, but it never came back. So that becomes 1564. Previously, if you go here and you draw and you see the double top here, right there, the market made the double top and went down. And Amazon was about 1929 when the EMA crossover told short. This is on a daily basis. If I go on 30 minutes, you will get a much before indications. So guys, it's a very, very small brief on Elliott waves. But yes, if you try to use Fibonacci and make the waves count, it will be very, very handy. You will have a clear targets because 38.2 is a target, 61.8 is a target. Similarly, 38.2 is a base and 61.2 is another base. So here you will find the support. Here, when you're going up, you will find the resistance. Hello? Anyone getting anything what I'm trying to explain? Because I can't see you at all.
Yeah, no,
Yeah, this is very helpful.
understand, Naval.
All right.
Naval, I had a quick question though. A similar system, have you tried out Ichimoku Cloud and what are your thoughts on it for reliable trading?
Can you come again? Like I couldn't understand you.
Oh, sorry. Can you hear me now?
Yes.
Awesome. Have you had a chance to try out Ichimoku Cloud for intraday trading?
I have tried it, but I do not want to go on multiple things. I try to limit my indicators so that because there are at least 100 to 200 indicators in this arena, right? If I go there and start to add more, I need to study them and then to test them. These are my tested indicators.
Thank you.
I have much more confidence in them.
So Naval, do you use this for day-to-day trade or in generally for a weekly kind of trade? The Elliot?
Elliot waves are for trends and for proper targets. So if you are, let's say Monday morning, you're trying to look for an apple. Let's choose an apple and make a trade for that. Okay. You see Apple is making a trend again. Okay. So here we will see Apple started from here. Okay. So let me make an Elliott wave. This is my bottom. This is my first stop. It went to second. It's running in the third. Now, how would I know it's going to run till third? Let me tell you how. So this was 1, 2, and 3. Okay. Now, if I add my Fibonacci retracement, sorry. And these are very interesting things. Like when you start doing it, you will love it. Not coming up, I don't know. This is my retracement from here to here. It came down up to 60%, but it just stayed there. It made a base around this and then went up. Now, how much it can go up? Let's see. You see, for last couple of days, it was trying to consolidate around 236. It tried to go up and then come back. You notice that?
Yeah, very much.
Yeah.
Now, in the extensions, because here, in the extensions, first it will try to face a resistance about 100%, which was 216. So it faced the resistance here, came back, faced the resistance, it broke. And then that became the base. Then it consolidated and the next target was 236, 233.70. It's 23.6, it's 233.70. So it made the base there. Now that is your support. So anytime it comes near, on Friday, it came low as 234.43, right? Now the stop loss is 233.70. Anytime it comes near, you buy it. And you play for 38.2, which is 244.59. That's your target.
Yeah.
And this is very useful. Plus, it gives you an understanding of where to trade and when to trade. Anytime it comes near the base, which is it has breached, take a stop loss and then long. Anytime it reaches the resistance, you could do a short. If it breaks, it will hit your stop loss.
Got it. Thanks. So generally, this is applicable for mostly individual stocks, right? So we don't apply this for SPY kind of thing.
You can apply it to anything. It will work. The only issue is that you need to understand when to or where to start counting. And you need to double click and make sure the candle you are selecting is right, because that is pretty important. Plus, whatever we understood until now, you see Apple gave me a crossover right here, which was 192, 193 level. People were panicking, but it gave me a signal to buy because the red line is up. It gave me a signal, DMI gave me a signal of positive because the strength is 33. MACD gave me a signal of blue. 1, 2, 3. RSI was above 60. It was a time to go long. And from here, it's still telling me go long, do not short it. So anybody who wants to play, let's say long term, I mean long term to like months to a quarter, this can be very, very helpful. This EMA crossover is something which I've tested for last 10 years and it works. It works very, very good. All right, so this is more than enough for the candles. I want to show you some more important stuff. Raghubai, you have some more time for me?
Yeah, sure. Go ahead. Yeah. Take your time, no problem.
Okay. Now, most of the people have recently started to understand what an unusual option is. And some of the screens which Raghu and other people are posting are from Blackbox. But if you use Think and Swim, this is the Think and Swim interface, right? On Think and Swim interface, you need to go and analyze, and then you choose an option. So here, if I choose Amazon, let's see. I want to show how to understand the options. So here you will see all the option trades. Cheap. It's easy to trade here. And if you want to take this out, you can detach it. This is the option trade. And you can like buy, sell based on this. I do not want to show you this. I want to show you this option statistics. This gives you an idea how many options were bought, sold. And this is a live information. You should always look out at the live information. This sizzle index, just read about it. It's pretty good. It's very helpful. Now, with all this, this is an important section. Here, this is option times and sales. Okay, so you can choose any option which is traded above 500 in quantity. That's it, and look out for it. So in Amazon, if I do that, I'll see that on Friday, 11:52, there were 1900 calls for 25th October were bought on 190. Now, if you want to see the details, you can see what exactly happened on that. It was a spread, or it was a normal trade, or it was a single trade. It was a single trade. It was not a spread. Somebody bought 190 calls at a price of 347 for 25th October. Similarly, somebody also bought on 15 November 338, and this is on the exchange. So whatever information which is coming on the black box, you can also see the information there. Instead of getting confused, if you start to derive information from your own hands, you will start to learn more frequently about that information. Most of the people don't use this to get those unusual options. So if I filter this out to, let's say, 100 or 10, you will see so many, because now just filtered out. And you can like add the price in IV here to see that what is the underlying value, what is the IV implied volatility, and if it is a spread or it's a single trade, just click there and do an analyze. You will have information. So anything like which is trading above in lots of 500 or thousands, it's good to analyze that what is happening in that trade. Also, in the option trade, you need to understand that you cannot apply all the spreads and all the strategies in option all the time. You have to be very considerate. Like on Friday, most of the people got panicked because they were assigned the Netflix. But before the assignment, you did not even realize that there was a 330 long put with you as well. So if the stocks were allocated at 330 to you, there was an equal hedge of 330 put with you guys. So even if the stock went till 100, the put would have also gone, like increase its value to 230. So you will never be in the loss. But people panicked. If you would have booked your put first or your stock first or kept the put, you would have still made the money. It's the thing that you do not need to panic, and you need to leverage the situation by just focusing on what you have. Okay, so that's it, what I wanted to show you guys on the options. Then I think Raghubai can use option strategies and all those things and can help you. So if you have any question regarding the charts, I give you a brief overview, right? So if you have any questions, read about it. Try to make some charts, try to count your waves, and then see if you are getting the right directions or not. If you post a chart and ask me a specific question, I will answer. If you do not do that and then expect me to like just answer you, I'm not your private service. Nobody is. I have my job. I do my job. If you ask, if I see a genuine effort being like done by your end, I will definitely answer you back. If I don't, I lose my like thing pretty easily that I'm giving myself all this pain to get all these levels, and people don't even respect that level. They try to create their own trades and tell, like when they're in a wrong trade, they just simply ask, what would happen this? No, you have to start learning first and then trade based on that. Any questions?
Just a quick one, Naval. When it comes to using options volumes to assist your process, do you look initially in your small list of stocks to pick stocks that you feel like trading for a particular day, or do you look at the massive volumes that are being put out and then do technical analysis based on those stocks in this list?
Like I have like 10 or 12 stocks which I try to follow. So when you try to analyze those stocks over a period of time, you know what's like happening in those stocks. Like I trade in Amazon, I trade in Apple, I trade in SPY, Nvidia, right? So I look at those and I try to see what's happening in the past couple of days in those stocks, if they're increasing or decreasing. So in the night, I analyze that, and on the Monday or next day morning, I just try to do the trades on those stocks only, not all 10. My favorite like option to trade is SPY and Amazon. SPY, I try to create the trend lines. I try to see the levels, and based on those levels, whenever, even if the market up and it reaches my level, I see whether the trend is saying me to go long or not. If the trend is saying me to go long, I wait till the market goes down so I can buy on dips. This option is a market where if you buy on dips, the return percentage is pretty high. Like on Friday, I bought Apple on dips. Every dip it went, I bought Apple. I lost $1,000 in Facebook, but I recovered about $870 in Apple. And you see Apple went up, up, up. I can send you a screenshot where I bought Apple at 70 cents, 240 calls. I bought Apple at 88 cents, and then I sold them at 145, and the day was 147. I did not expect a huge return, but I had a specific target in my mind, so I placed my order right there. So as soon as the market went up, it took my order, executed it, and I'm done. Most of the people do that. What they do is they wait that yes, it's going to go up, 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 up. It may happen, but 90% it will not happen. So you need to book whenever you can.
Naval, what percentage of your portfolio you keep for stocks and what for options? Like,
I have zero stock in my portfolio, zero, literally zero.
okay.
Big zero.
Naval, just a question. On Friday, just wanted to know, how do we know the direction of Netflix? Like, I was thinking whether it will go up or down. I was not sure.
Let's see. Let's go to the chart. Okay. Rather than me answering that, let's see what the chart says. So on Netflix, this was the chart of 308 when the earnings came. Okay. Look at what I explained to you. The next candle was not up to the half, correct? So this would have been your stop loss, and you just need to short it and then wait. Boom, it went down, down, down. So if you want to see the 1-day chart, look at 30-minute chart. This was a 30-minute chart. Here it closed on 298.69. Next day, if you do a half of it, it will be like 300 something. Next day, it never even crossed 300. It came up. So if you do the like this, you need to divide into 100% and then take the exact 50% of it. You can enter at 40% and 50% is your stop loss. So 10% is what you're going to lose in a candle. If you do that, you just need to hold short and then wait. Bum, 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 bum. It will never come. Now profit, you could book profit here, or you see there was a descending wedge here. This is the moment where you will book your profit. Because here it started to make a base now, but the volume is also low. But at this moment, it's a weekend, it's a close, so it's better to book profit and go out. And if you look at all the indicators which I showed you, right here, it says green up. It says at this moment, it should be a buy. It's a crossover. But MACD is saying no, it's still red, but it's converging at the last minute. My strength index is saying no, my strength is weak. My positive strength is also going down. My negative strength is increasing. So no. My RSI is saying it's below 30. It means it's bottoming out right there. So in the last 2 hours, it consolidated and then it tried to jump. The day low was, if I click on this, the day low was 273.40. Okay. And from 273.40, it even came up to 278. And one more thing, like you see here, the patterns, these patterns are pretty useful and handy if you don't understand that. If you don't understand that, just read and look out for a definition. Dodgy star bearish. So this is the pattern and this is how it's going to be used. So just follow simple this 4 indicators, try to use it. It's very, very useful.
This one we will know in the beginning. At 9 o'clock we should do this, or at 9:30. we want to know at 9:30 or 10 o'clock, we want to know the trend, right? At that time, we should do this.
Like I always do that one night before, so that Monday morning I exactly know what I'm doing. Because I am a very short-tempered person. Okay, and my friend Manjinder, who is on this call, he is there to poke me up all the time. Hi Manjinder, you are there, I know. So
Yeah, I'm
he's
here.
there, and we always trade together. So what we do is, I tell him that yes, this is the level, and he keeps a track for me. So in the morning, he takes the trades for me because I am usually in the trains, so I cannot have all this like access to the internet. So he does the trade for me. So we prepare the levels which I post every time for SPY and S&P in the group. Follow that level and try to trade a stock within that level.
Naval,
Naval?
one question. I'm sorry.
Yes,
Hey,
yes.
go ahead, go ahead.
So that P, that symbols, right? How do we get that to see that?
What?
The blue colored ones, like pattern. How do we?
They are
get that?
automatically there. You do not need to do anything. They're automatically there.
I just I'm in investing.com for Netflix. I don't see that. I cannot see that. So you put for one day?
This is 30 minutes. And for earnings, I use 1 hour. And 1 hour, it's much more clearer.
Okay, sure. Thank you. Yeah.
So if I go in earnings, right, and I do a 1 day earning right before. So here, if you see, there was an inside bar. Nobody noticed on Amazon. There was an inside bar here. 87.75, high and low. Next one, 86.93 to 82. The volume was less. Next day, there was still inside. So it's inside bar, bar, bar. And then you see the breakout. It went up. It stayed there or not, that's a separate question. But it broke out from this range. So when this range again touched, it was time to short. But here the volume is less as compared to here, because this was a day when the earnings were there. You can test it on any stock, any index ETF or anything. It should work.
Hey, Naval, your calendar spreads have been hit. Members made some good money on those. Can you explain how you construct those calendar spreads?
Like, first of all, for doing a calendar spread, you need to understand what is the IV on a stock. Okay, so if implied volatility is anyway above 100 to 200, that's a time when you try to eat that premium. You do not need to play for the premium or gain for calls. Let's say in case of Netflix, the premiums IV were above 300%. Okay. So when it opened on 308 for my 310, right? It came, the IV came to 35%. So all that percentage covered my risk because that was supposed to be gone. If it would have opened 310 and stayed there, I would have made good money. But I didn't lose money because I still ate that premium. So you need to see wherever the IV is high and the delta is low, do a calendar spread.
Okay.
And usually, like in Robinhood, if you have a day trade and you do not have the option to sell it, right? Before close of the day or before you're entering in a position where it is dicey or something happens, let's say you have an Amazon option of 1800 and all of a sudden you are in $200, $300 loss. Instead of booking the loss, at the same time, sell 1805 call. It will hedge your position. You do not have to do them together. You buy 1800 at any moment of the day and you are feeling that market is going to go low. Don't get panicked. Sell 1805.
Yeah, to cut losses. But yeah,
No, you
that
will make money on that.
Yeah.
It's not about cutting losses. First, because now you can trade both of them separately. So next day, if market opens and the stock is still further down, 1805 will lose much more premium as compared to 1800, right? So you will gain to that. And look at the levels in the screen. So as soon as the level comes, you just exit and keep the long position. So the long position, put a stop loss and then wait. So you will earn from the leg you sold and you will earn from the leg you bought.
Yeah, that's true. Understood. Thanks, Naval.
Simple recommendation is do not look into multiple stocks. Do not look that, yes, I can do this, and I can be a millionaire in a day. That's not going to happen. Look for a simple stock, follow that for a month and trade in it. You will earn. You do not have to look for all the trades. Do not have to look for all the earnings. Just be honest with yourself. How many earnings you made money? Very few. How many you lost money? Most of them.
Yeah, true.
Any last questions before I go out?
Naval, what is that pivot website you said? The India one?
Pardon? Can you speak a little
pivot,
louder?
You said that pivot website, right?
Pivot trading.
From India. Pivottrading.co.in, right? Okay.
Yes.
Thanks.
This has the Gann pivots, which you want to use if you want to make this chart.
So, Naval, this is Conroy.
Yes.
So, you spoke about being stuck in a meeting, okay, and hence you lost some money. In Think or Swim, can you put in a trade wherein you can say, this is my entry price, and this is for options I'm asking, okay, this is my entry price, this is my stop loss, and this is my target. Like you said, you had a target in mind based on the,
Yes, you can do that. You can put a stop loss and a target at the same time.
You can do that for options, huh?
Yes.
Okay. Any thoughts given the new scenario of zero price trades? Okay, in terms of which are I know you use Think or Swim, but you spoke about Robinhood.
No, I don't use Think and Swim. I use E-Trade and Interactive Broker. Think and Swim I use when I'm stuck with my Retrace in other three. So
Okay.
Think and Swim is like my backup option. It's a little complicated to execute, so I don't use it.
Okay. Thank you.
Do you get 3 trades per platform? Or
Yes. You can have as many as much account. And don't worry about PDT. I have PDT at least 500 times. It doesn't matter.
And we're both just open to your commission.
Open as many accounts you can.
So you open as many accounts just because you get the free trades, is it?
Yes.
Okay. I didn't realize.
oh, I didn't know that. Thank you.
Like you can open E-Trade, Interactive Brokers, Think or Swim, Fidelity, Robinhood. Now Webull is a very wonderful platform. I use that for my analysis in the trains. It has all the charts, all the data, and let me create that. So I use Webull and TOS. So you can open as much and pull up your friends if he's interested, so that you both can. Because sometimes what happens is I'm in my presentation, so I have my friend Manjinder who helps and tracks trades for me, and that's how we work.
Interesting.
Thank you so much, Naval. This was really helpful.
Can I just say a few things? Sometimes, people sometimes, I can say I can talk on myself. When are you sometimes making 300-400, depending on what your appetite is, sell it. Sometimes we think it's going to go up, but you lose that even. Sometimes making 300, then all of a sudden it's 250, 150, sell it. This is just one advice I give. And sometimes
Yep. So if you think that yes, $200 is good for you, you just book it.
yeah, so everybody's appetite is different. So if you're making a certain amount of money, you rather sell it and keep it.
If
that is going to go up more.
You can hear my child.
Yeah.
I'll come. Wait. So I mean that if you're looking at the levels, then you do not have to wait for the appetite. But if you do not have the levels, it's like ATM machine for you. You go there and buy $200, get $200. That's it. Go out. But if you have levels, then stick to them. Did I answer you? All right, guys, it's time for me to leave. So anything you have, just put me on the group and I'll respond to you back.
Hey, thanks, Naval, for the great session. Like answering, like it was very helpful. And also, guys, like we are almost close to 2 hours, so it takes an hour for me presentation. Can we schedule another meeting like in next 2 weeks, some weekend, because it will be a lot of information on a single day for you guys. What do you guys think?
Yeah, that would be awesome. Thank you.
That would be great. Yeah.
Yeah. Let's meet. I will schedule another timeline. We'll meeting in a couple of weeks, maybe probably like early November after the Diwali.
Okay.
Yes.
Thank you, everyone.
Thanks,
Thank you, Raghu.
Thank you. Thank you. Have a good
Thank
weekend.
you. Thanks, Naval.
Thanks, Naval.
Bye-bye.
Thanks, Naval. Thanks,
Thanks
Raghu.
to Ram, Srinivas, Vanshi for helping in the chat. Thank you very much.